Welcome to this essential guide on cryptocurrency investing. The world of digital assets can seem complex, but with the right knowledge, you can navigate it confidently. This video will break down the fundamentals, helping you understand what crypto investing entails. We'll cover everything from basic concepts to practical steps for getting started. Our goal is to provide a clear, educational foundation for anyone new to this exciting space. Let's demystify crypto investing together. At its core, a cryptocurrency is a digital or virtual currency secured by cryptography. This makes it nearly impossible to counterfeit or double spend. Many cryptocurrencies are decentralized networks based on blockchain technology. Blockchain is a distributed ledger enforced by a disparate network of computers. It records transactions across many computers so that any involved block cannot be altered retroactively. This technology underpins the security and transparency of cryptocurrencies. One crucial concept is volatility. Cryptocurrency markets can experience rapid and significant price swings. This means potential for high returns, but also for substantial losses. Understanding this inherent characteristic is vital. Decentralization is another key concept. Unlike traditional finance, there's no central authority like a bank or government controlling cryptocurrencies. This offers autonomy but also places more responsibility on the individual investor. Market capitalization, or market cap, measures a cryptocurrency's total value. It's calculated by multiplying the current price by the total number of coins in circulation. Market cap helps indicate a crypto's size and stability relative to others. Bitcoin, often called digital gold, was the first and remains the largest cryptocurrency by market cap. It introduced the world to blockchain technology and peer-to-peer electronic cash. Bitcoin is primarily seen as a store of value. Ethereum is the second largest cryptocurrency and introduced smart contracts. These are self-executing contracts with the terms of the agreement directly written into code. Ethereum powers a vast ecosystem of decentralized applications. Altcoins are all cryptocurrencies other than Bitcoin. They often aim to improve upon Bitcoin's original design or serve different purposes. Examples include Solana, Cardano, and Polkadot, each with unique features and use cases. Stablecoins are a special type of cryptocurrency designed to minimize price volatility. They are typically pegged to a stable asset like the US dollar or gold. Stablecoins offer a bridge between traditional finance and the crypto world. The first step is choosing a reputable cryptocurrency exchange. These platforms allow you to buy, sell, and trade digital assets. Look for exchanges with strong security, competitive fees, and a user-friendly interface. Popular exchanges include Coinbase, Binance, and Kraken. Research their features and regulatory compliance before making a choice. Ensure the exchange operates legally in your region. Once you've chosen an exchange, you'll need to set up an account and complete identity verification. This usually involves providing personal information and uploading identification documents. This process is known as Know Your Customer, or KYC. After verification, you can link a payment method, such as a bank account or debit card. You can then deposit funds and begin purchasing cryptocurrencies. Start with a small amount to familiarize yourself with the process. Dollar cost averaging, or DCA, is a popular strategy for beginners. It involves investing a fixed amount of money at regular intervals, regardless of the asset's price. This helps reduce the impact of volatility over time. DCA averages out your purchase price, preventing you from buying all your assets at a market peak. It's a disciplined approach that removes emotional decision-making. Consistency is key with this strategy. Another common strategy is long-term holding, often called hodling. This involves buying cryptocurrencies and holding them for an extended period, typically several years. The goal is to benefit from long-term price appreciation. Hodling requires patience and a strong belief in the long-term potential of your chosen assets. It helps you ride out short-term market fluctuations without panic selling. This strategy is less about timing the market and more about time in the market. Never invest more money than you can afford to lose. This is the golden rule of all investing, especially in volatile markets like crypto. Be prepared for the possibility of losing your entire investment. Diversification is crucial. Don't put all your funds into a single cryptocurrency. Spreading your investments across different assets can help mitigate risk. Research various projects and their potential. Set clear investment goals and stick to them. Define your risk tolerance and create an exit strategy. Knowing when you might sell, whether for profit or to cut losses, is important. Security is paramount in crypto investing. Always enable two-factor authentication, or 2FA, on your exchange accounts and wallets. This adds an extra layer of protection beyond just a password. Use strong, unique passwords for all your crypto-related accounts. Consider using a password manager to generate and store complex passwords securely. Never reuse passwords across different platforms. For larger holdings, consider using a hardware wallet, also known as cold storage. These physical devices store your private keys offline, making them much less vulnerable to online hacks. They offer superior security compared to exchange wallets. Be wary of phishing attempts and suspicious links. Always double-check website URLs and email senders. Scammers often impersonate legitimate services to steal your credentials. Before investing in any cryptocurrency, conduct thorough research. Read the project's white paper, which outlines its technology, goals, and roadmap. Understand its fundamental value proposition. Examine the team behind the project. Look for experienced developers, clear leadership, and a track record of delivery. A strong team is often a good indicator of a project's potential. Investigate the project's community and ecosystem. A vibrant and engaged community can signify strong support and adoption. Look at social media presence and developer activity. Understand the real-world use case of the cryptocurrency. Does it solve a problem? Does it have a clear utility? Projects with practical applications tend to have more sustainable long-term value. Avoid succumbing to fear of missing out, or FOMO. Don't buy into a cryptocurrency simply because its price is rapidly rising. Such impulsive decisions often lead to buying at the peak and subsequent losses. Conversely, don't let fear, uncertainty, and doubt, or FUD, drive you to sell during market downturns. Panicking and selling at the bottom can lock in losses. Stick to your long-term strategy. Be extremely cautious of scams. If an investment opportunity sounds too good to be true, it almost certainly is. Avoid schemes promising guaranteed high returns with little to no risk. Overtrading can also be detrimental. Constantly buying and selling based on short-term price movements often leads to higher fees and poor returns. Focus on your long-term strategy rather than day trading. The cryptocurrency landscape is constantly evolving. New technologies, applications, and regulations emerge regularly. Staying informed is crucial for navigating this dynamic space. Blockchain technology continues to find applications beyond just currency, impacting industries like supply chain, healthcare, and gaming. The potential for innovation is immense. While the future is uncertain, cryptocurrencies and blockchain are poised to play an increasingly significant role in the global economy. Understanding these trends can help you make informed decisions. Investing in cryptocurrency offers exciting opportunities but comes with inherent risks. By understanding the basics, managing risks, and conducting thorough research, you can approach this market with greater confidence. Remember to start small, prioritize security, and never invest more than you can afford to lose. Continuous learning and a disciplined approach are your best allies in the world of crypto investing. Thank you for joining us on this educational journey.